Hey, good morning, everybody. What's going on? It's Saturday morning. This is Multifamily Unplugged. Glad that you are here. And boy, that music's enough to get you jazzed in the morning, isn't it? Hope you got your coffee in hand. And if you're new to the show and somebody asked you to come or listen, glad that you're here. I want you to, help us out on social media a little bit. Like us, love us. If you're on YouTube this morning, smash that subscribe button. We're always bringing good, relevant content for where we are in the marketplace, for your multifamily investing, how to raise capital, the things that you need to do or need to have in your toolbox so that you can operate on a daily basis. Glad that you're here. Remember, coming up October 17th and 18th is my 5th annual virtual multifamily summit. You can do this from your office or from your home, but it's an event this year you're not going to want to miss. I am super excited. So you're going to want to buckle up for this year's event for sure. 20 speakers and panelists. My guest today is going to be a panelist at the summit. We're going to talk a lot about that. We're going to talk about raising capital and what the environment is like right now. But this year, I'm going to have other speakers like Neil Bawa is going to be there. Matt Faircloth is going to be there. Vina Jetty is speaking. Dugan Kelly will be talking about securities law. I have Chad Coe talking about mindset. There's a host of great speakers this year. And, after doing this for a few years repetitively, I think we've really got it dialed in. So it will be exciting, a lot to choose from. If you choose to upgrade to VIP this year, VIP is going to offer you some up close and personal networking with the speakers, with the panelists, with other attendees of the event. You're also going to get some free gifts. I'm going to give away my book Exit Plan and a few other items that will help you, like underwriting. I'll give away my entire underwriting tool and course around that. So think about upgrading to VIP. But early bird special going on right now. Make sure you go to multifamily24. That's multifamily24.com and get registered for the early bird special. All right, let's get on with the show. Let me bring in my guest, Isaac Bennett. Isaac, how are you?
I'm well, Mike. How are you?
I'm great. Good to see you, man. It's been a while.
It's good to see you too. And I did as you said. I have my coffee, and actually, right as I came on, I almost spilled it, but crisis averted.
I have coffee. Been drinking coffee all morning, so
all hyped up and ready to roll.
So you're hanging out in Palm Springs, huh?
I think definitionally that's exactly correct. We're going to spend at least a couple of months here. We chose to come when it was 115, so there's nobody else here, and we're just alone by ourselves at the pool baking like little beans, but it's pretty fun.
Yeah, well, you can't sit in the sun too long in that, but definitely I love Palm Springs. It's a great place to be. So
for lovers of architecture and great houses, like you could just drive around for hours and have fun looking at cool mid-moderns. It's pretty fun.
Yeah, pretty cool. That's for sure. And then, I'm not sure, but on Tuesday nights down there, I think they still have that event downtown where the streets are blocked off and they have a lot of vendors and open like a farmer's market type thing.
Yeah, and I think they've been there's actually a little piece of art on the wall where we're staying that's like a periodical from the 60s that was advertising that Tuesday thing. So has it been going for like 60 plus years? Do you have any idea?
Yeah, something incredible, but I know it's always fun to go to that. So
I'll have to check that out.
Yeah. But anyhow, let's get going here. So one question I always ask my guests when I start this show, and I always, I keep saying I'm going to write a book one of these days on this because, the question is, in one word, what best describes you personally and professionally? And one of these days, I'm going to take all these answers that everybody's given me and write a book on it. So
I'm going to flip this question on its head. How would you answer that about me, Mike? Because I don't remember what I said last time we talked. If you asked me that, I don't remember what I said. So I'm curious from an outsider's perspective, what word would you use for me?
Well, it's been a while since you. What would I say? I would say that you are exploratory.
Wow, that is not where I thought this was going.
Yeah. But
Yes.
look at your life right now. I mean, you moved from Central Illinois to California. You're traveling around a little bit, trying to figure out where you and your wife want to live. You're kind of exploring.
That's good. My wife likes to talk about spelunking, so maybe you're right. I don't know. I think if I had to answer that question, which I do, I would say maybe resilient. It's two words, but resilient and persistent. So I just think that I really believe at the end of the day that my tombstone will just read, "He persisted."
Yeah.
Because I'm not sure that there is a more important sort of thing you have to embody in business than just persistence, because it's so hard and you have so many hurdles and you just have to embrace those and persist like crazy. And every time I think I've learned that lesson, I have to learn it a little harder.
Yeah, right. I agree too. I mean, it's just like, Rochelle and our company is Resilience Equity, right? And
great point. It feels like I plugged that for you and I didn't. That wasn't like, yeah, that's great.
But, I think you have to be resilient. And I think there's just so many people, especially in the industry that we're in, when the wind is at your back and things are going great, everybody looks like a hero. But as soon as the wind shifts and things start to change and you really have to work a little bit harder, you have those stumbles along the way. And when you stumble, you got to get back up. You've got to be resilient.
Yeah. And I think it's, I played both baseball and golf growing up, and it's kind of business and life are kind of a combination of the two, where if you let golf frustrate you, it will totally frustrate you every single time out. If you look at the game as something where you can make incremental improvements, and yes, you left 3 or 4 shots out there that you should have had, but you also hit a lot of good shots and you did some things well, and you actually give yourself credit for those things and you forgive yourself for the mistakes that you made, then it can work really well, but it's hard to learn. And from a baseball standpoint, I've learned that, it's probably not as much about slugging or even batting average as people think that it is. It's about how often you can get on base and how much you can limit outs, right? So it's protecting your downside and limiting outs. And then, there's a defensive corollary there too, not to take the sports analogy too far, but if you can play great defense and not keep the other team from scoring, and I don't, we believe in mutually good deals, but ultimately protect yourself well, then it makes a big difference too.
Yeah. So 2 thoughts around that. My son is a golfer, avid golfer, has a 300. Say it again.
And a baseball player.
Yeah, and a baseball player, but not so much baseball anymore. He's in college now, but a 350-yard drive all the time, but he gets in his head.
Oh, yeah.
And, slices it, goes left, goes right, and just if he could stay out of his head. And I think we do that in business. We get in our head, right? And it's not the right kind of getting in your head. You got to stay out. So
we also swing for the fences a lot, or swing for the, we drive for show. And at the end of the day, it's the short game and staying in the fairways that matters. And, there's something to be appreciated about that, I think.
Yeah, 100%. And I want to just tap into that comment you made about defense, right? It seems that we're in an environment today where a lot of what we're doing on a daily basis is defending everything. Where do you get, where do you find time to play offense? Sometimes is what I have to ask. It's property management, it's construction, it's loans, it's prepayment penalties, it's all kinds of things going on in the market. What you feel like some days you're just battling the elements rather than being able to play offensively. Any thoughts around that? Or I know you got some things going on also, but
Yeah.
How do you deal with that on a daily basis?
I think that you have to become well-rounded, because there are times when you have to simply tighten your shorts up and play defense. And I actually think most people think too offensively too often. And it sounds so cliche. I think it is cliche, but you have to actually fall in love with the idea of being defensive, being a defensive investor, investing with a margin of safety. And it's not an easy thing to do because nobody gets accolades for not doing a deal or for being defensive or for making a tough decision and making a capital improvement that doesn't show up in the NOI that you need to make. So I think that ultimately you have to fall in love with doing the right thing. And I don't see very many people that are in love with that. It's a difficult concept, and it can come and go day to day. But if you fall in love with doing the right thing, you'll build a discipline and a wisdom that is rare.
Yeah, 100%. So real quick, just tell people who you are, what you do, what your business is.
Sure. My name is Isaac Bennett, as you can see on the screen, and our business is called UR, YOUARE. Our website and our tagline is apeoplebrand.com. We primarily function within three businesses in UR. We have UR Abundant, which is our hard asset syndication company, of which our multifamily deals would fall within that. We have UR Launched, which is our venture syndication firm, both consulting and venture capital raising. And then we have UR Home, which is our realty side. So very basic overview of the things that we do. There's a couple of other UR businesses, but for the sake of this podcast, I think that's probably a good enough primer.
Yeah, very good. So talk a little bit about, raising capital today. I know that, and just to let people know, your focus is a capital raiser, basically. And, so talk about raising capital today.
Yeah, and we might be a little non-standard in that regard as to where we don't just focus on, throwing a bunch of money at various deals. We hand select our deals very carefully, and we're always at least close enough to the operator to be in the weekly meetings, and making sure that we are affecting the operations and involved on that level. And so there is a level of control that we have that most of these capital raisers don't have or want. As far as raising capital today, we have something of a shift where our two real estate deals right now, which are horizontal development deals in Texas, those are the only deals that we're doing right now that we're raising from individual investors. We have somewhat shifted to a strategic single source of capital for both our venture deals and probably our largest real estate deals moving forward. So I think on the individual level, this is actually an operator's market. This is no longer a financial market. And you better be able to have more behind you than just a flashy pitch deck and a bunch of promises about it, an 8 and a 70-30 or a 9 and a 80-20 or something. Like, I don't think that model actually ever really worked. It was just market conditions that were showing it. And I think a lot of people are really burned right now by it. So you better just have a really good story, really compelling story, and a true value add that's more than just a financial story.
Yeah, 100%. I think that, people are a little bit skittish today, but I don't believe that they should be. I had Neil Bow on my show a couple of weeks ago, and he talked about that he believes by the end of the year that we're going to start to come out of this cycle. We all know that. Listen, there's no geniuses in the business. There's only cycles, and we're in that down side of the cycle. So we're somewhere around the third or fourth quadrant of the cycle, and to come back out, some people are saying that we're done, we're almost there, and that we're going to come back out. How do you feel about that?
It sounds like predicting the future to me.
Yeah.
Which I try not to do. I still think the assets are being overpaid for. And I would argue that they're probably being overpaid for by 40 or 50%. because what I hear from syndicators is that they're still thinking that these are financial assets and they're not. They're liabilities that depreciate. And I would be reticent to buy something with an unlevered yield on cost less than 9 or 10, truly, because I think that depreciation, not the balance sheet type, but the type that actually shows up in your building, is so much greater than people realize over time. And so if your strategy is, well, we're just going to make the capital improvements that drive NOI and then sell it before we have to do the capital improvements that don't drive NOI, then so be it. But that's a financial trade. That's a private equity trade. That's not a real estate business. And ultimately, I think that was most people's business plans over the last 10 years, since these acts have been passed to make this sort of easy and legal to do. And the reality is the multifamily business in general has always had the benefit of declining interest rates until the last 2 years. Nobody that I know actually understands what this business is in an environment where interest rates are going sideways or up. And so I don't think we know if the business actually works the way it's currently being done, unless your unlevered yield on costs are very obviously accretive to doing a business deal. I've seen some stuff trade, interestingly, but not most.
Right. So I want you to explain that, though, the levered, unlevered cost. And you had made a comment about your levered being at 9%. Explain that to somebody who wouldn't understand that.
Yeah, unlevered yield on cost would just be your NOI divided by your all-in costs, including closing costs and everything else, stripping out all of the debt. So what is this yielding on a true basis, stripping out any debt or any leverage from the equation? So that's where you can actually truly understand what a property is doing. And then you have, NOI, unfortunately, is a financial metric that can very easily lie to people. And, you talk about capital improvements and duration of capital improvements and the inflation applicable to those capital improvements and whether or not they're done right. Way more calculus there than most people are capable of doing. Nobody's actually capable of predicting it into the future. So if the business model is build and fix and sell or whatever in 3 or 5 years, it's a financial trade. And I think the long duration real estate holders who really take into account capital improvements and what it takes to have a durable asset over 30, 40, 50 years, that's a real estate operator. And that is somebody who can be durable through the market cycles. To your point, I just don't see anybody doing that, Mike. I have a few friends who do that, but they're like, guys in their 70s that have owned stuff since 1985, and they just were always wary of capital markets and wary of making these financial trades. And they did extremely well. So it's not that real estate you can't do extremely well. I just think you have to be wary of whether or not it's a real estate deal or a private equity capital. Yeah. Two different things.
Yeah. So it's interesting you say that, because yesterday I heard a comment from one of my partners on a partner call that said there was an attorney who was ranting and raving about how these syndicators that are doing 4 and 5 year deals don't know how to operate and don't know how to run the business, that if a true syndication is a 20-year deal and you should be in one for 20 years. I don't necessarily know that I believe with that philosophy, because that's not how we operate, right? We're at maximum 7 years on our deals, but because I think that's where, you've taken enough depreciation and you have, seen some returns that make sense, but 20 years is a long time.
Are you ready to skyrocket your investment portfolio and leave a legacy? Are you tired of inconsistent returns received in the stock market? Then it's time you take a look at alternative investment options like a passive investment in multifamily real estate. No tenants, trash, or toilets. Just a solid return on an annual investment, including quarterly returns along the way. These lower risk and secure assets are also a great hedge against inflation. If you want to hear more about these types of opportunities, email me directly to schedule a 15-minute consultation to see if you qualify. You can email me at mike@mycoreintentions.com.
I mean, I think the reality is that nobody can predict the future, and pro formas can really lie to you. And so getting back to your point about, we have a 7-year max. If you buy it right, you can make good financial trades here. You can force some value. You can create more, you can grow the lease base and actually create value out of that, regardless of what the interest rates in your property are doing. It's all about your basis from that standpoint. Or sometimes the creativity with which you structure the deal. And there are operators, yourself included, who are good at that and who can make people money doing that. I just think as syndicators, we have to be honest about what the business plan is, because I hear really good, thoughtful, smart syndicators who are like, what do you mean you want to hold this longer than 3 or 4 years? Like, there's no way the business plan can hold up to the capital improvements that would be needed. Can you imagine if we had to replace a roof? I hear these types of comments all the time from reputable people.
Yeah, right,
and,
right.
And yes, I can understand that. But we just have to tell people that. You have to say, like, look, we're trying to get in and out before we have to make capital improvements that destroy the value of this deal. And that's what it is. Because otherwise it's disingenuous. And those are your partners. Those investors are your partners.
Well, and you know what else happens is that when things start going south for an operator, they tend to crawl under a rock and don't share data and don't share information. We had a transparency call on one of our properties last night, and it was something that we needed to do. We needed to give investors a close update as to where we are and progress. And matter of fact, there was a portfolio we were buying 5 properties on, and we decided not to buy the last 2 properties, just because it didn't make sense from what we'd already bought and the workload to take over those value add assets, similar to what you're talking about. But we had to, tell investors last night, hey, we're only buying 3 of the 5. We bought the best 3, and we're gonna make these. We can still hit our returns and our projections, but you just got to stand beside us right now and let us do our job.
Mike, there's no other way to live.
Right.
There's 2 types of people. There are people who suppress and hide bad news, both personally and professionally, and act like it's going to go away. And then there's people that confront and address and divulge.
Right.
And I lived the former for a long time, and it created so many problems. And the issue was that I valued my image more than I valued authenticity, integrity, and the truth. And having made that change in my life very painfully, some years back, I can tell you this is a much better, much freer, much more authentic way to live. And I would just challenge syndicators out there to be this way. I had a call with a good friend recently, good guy, great guy. He ran into some major troubles in deals, and he got some advice to be extraordinarily transparent with his investors. He took that advice, he went to them, and he found a way through. And this is after he told investors he's probably going to lose the deals. Yeah. But he found a way through, and I think his investor base probably sees him in a totally different light today because he was so authentic and had such high integrity about it.
Yeah, I agree with that 100%. I think that, just being truthful and communicating is what investors are looking for and what they need. I think that 2 years ago, it was really easy to raise capital and get in a deal and take a deal down. And then the tide shifted, and, it's gotten a little bit more difficult. I think there's a lot of ways, and you and I don't have any magic answers, right? We can't tell somebody, do this and you're going to raise $100 million. No. There's a lot of coaching and training out there about that, but I think it's more around being accountable. But, so you could do social media, you could run ads, you could do lead magnets with, ebooks or books and speaking on events, or you could just simply talk to people one-on-one on a daily basis. What do you think is the best way for somebody trying to raise capital today works?
The answer is really painful to hear, and that's you and your deal need to deserve it. And I I encourage people to get out there and try and work really hard and talk to a ton of people and throw a lot of lines out. But if you don't deserve it, and if your deal does not deserve it, you're not going to raise the capital in this environment. And there's a lot of people who raised a lot of money between 2018 and 2022 who not only didn't deserve it, they didn't have the integrity to actually manage the assets that they were putting forth. I'm not even casting stones. It's just simple reality. So if you are really struggling to raise capital, it should give you information about yourself or about your deal that you should take very seriously. And you know, people might be outsized in the types of deals that they're taking compared to their credibility and compared to how much people trust them, or their deal just isn't as good as they thought it was. You know, because I think virtually everybody in this space is a deal junkie, virtually everyone. And their motivations are as much or more for the fees than they are the actual operations of the deal. And so I just think a really thoroughly honest, straightforward look at yourself and your deal when you're getting feedback on things like that is important. And then you just have to keep doing the work repetitively year after year after year after year after year after year. And it goes back to the first thing we talked about. Like, you have to prove to people that you're disciplined, especially in a time like now where virtually everybody is losing money or has a deal going sideways or has lost money and they don't even know it yet.
Yeah.
Like the credibility of this industry is shot. Yeah. And it probably deserves to be. And frankly, now it has to be rebuilt on an individual one-to-one basis. And if you can do that, you're going to come out the other side looking absolutely beautiful, but you got to be willing to put in the work.
Yeah. And now's the time to put in the work, because if you can work your way through a down market, when the good market comes, you're going to look like a genius.
Oh, you're not only, yeah, you are. You're going to look like a genius. That's exactly correct. And you're going to have, you know, you should be able to buy some great based deals. Yeah.
So I just have to tell this story really quick. So last week I was in North Carolina. I was at a longtime friend of mine's house. Guy I met back in the early 90s, became really close friends, stayed friends for years, but he's in the real estate business. We kind of grew up on the residential retail sales side of the business, and he's still doing that. And what was interesting was I was there for about 4 days. And during that time, we would sit on the front porch of his house, and he took 2 listings over that time. I think he sold 4 properties that he had on the market in that 4 days. And yeah, you know, and I look at that, and we had this conversation. He said, it's just because I've been in the business 30 years. I do the same thing every day. He said, and people forget that. They want things to come to them so much easier. And although after 30 years, he's got this easy business, he put in the work. You know, I think John Maxwell, I think, said that he was speaking at an event. Somebody came up to him after the event and said, "Hey, I want to do exactly what you're doing." And Maxwell said to him, "Well, are you willing to do what I did to get to where I'm doing what I'm doing?" You know, and that equates a lot. You got to put the work in and the effort to get the end results.
Yeah, and I'm a little hesitant to share these types of stories because for young people, I don't want them to become discouraged by it. So I'm going to try to tie 2 things together here, Mike. I don't know if they're going to tie together well or not. Full disclosure, right? Novak Djokovic, best tennis player of all time. He went essentially 2 years. He loves chocolate. He went 2 years without even tasting chocolate. And after he won a major tournament where he beat, I think, Rafa Nadal, at a tournament that Rafa dominated, Djokovic wanted one thing in the locker room afterwards, and his wife brought him a chocolate bar, one of these chocolate bars that's squared off. And Djokovic relented, ate the chocolate, 1 square of the chocolate, 1 little square. That was how he rewarded himself for winning. And his message was basically, this is what it takes. And, you know, I don't think everybody out there has to be Kobe Bryant or Novak Djokovic or somebody like that, but you have to at least resemble that type of tenacity and that type of discipline to get to where you want to be. So let me tie this to a second principle. Proverbs says that wealth gained hastily will alight soon. And I don't care if you believe what the Bible says. I don't care what your faith is or anything like that. I can guarantee you that portion of it is true. I've seen it so many times. So you should no longer desire to earn something quickly. If you can fall in love with the idea of building something slowly and letting it compound and gain over time, both skills and financial gains, that is something you will actually care about and protect. So if you think short term, and even if you do have a big win, maybe you're a broker and you have a big sale and you make $1 million on a trade or something, great, that's great. Be careful, it'll go quickly because you gained it quickly. And so you have to both figure out how to enjoy the discipline and then also figure out how to enjoy not having short-term sort of dopamine hits from success. You need to think about getting the long-term value because that's wealth that won't alight soon anyway.
Yeah, 100%. Well spoken. Well spoken. Well, listen, coming up is is my 5th annual multifamily summit virtual event. I'm super fired up about that this year. I know you're going to be on a panel there talking about raising capital. There's some other great people that'll be on that panel with you. I think it'll be a great exchange. Some smart guys. So
why'd you bring me on then? I'm living in Palm Springs in 116-degree weather. I cannot be very bright.
Hey, they say if you're the smartest guy in the room, change rooms, and that's why I have you on my show, because I always try to have smarter people than me on. So, but what would you tell somebody who's thinking about coming to the event?
From my experience of being on was it last year that I was in the event or 2 years ago?
Yeah, you were on last year. Yep.
I think that it is an event that will return you 10 or 100 times whatever you're going to pay for, because it's not very much that you're charging, and ultimately you're going to get 1 or 2 insights, probably not from me, but from one of these other smart guys or gals that will reward you hugely beyond it. And I would just say, give it an authentic a couple of days where you're ignoring your phone, you're ignoring some of the other stuff, and you're really dialing in and you're taking notes, and you're pushing back on some of the ideas that people say, maybe even in the comments or the notes, and challenge the things that they say to really work through that type of thing. So easy value proposition to come to this type of thing. And you can feel free to tell me that I'm an idiot on the panel as well when you're there, and that'll be worth the dollars just as it is, right?
Yeah. Well, I always enjoy listening into that kind of stuff. So I'll let you and Cindy McGuire is going to be moderating the panel again this year.
Great.
And she's a rock star when it comes to capital raising, and there's a difference in capital raising, and I know you guys will get into this on the panel at the summit, but there's the difference between the retail investor versus family office or institution. I remember a year ago meeting a guy who said, yeah, I'm going to do this 300 unit deal and I'm going right to an insurance company. They're going to fund the deal. And I thought, not your first deal out the gate, my friend.
No.
And, we all start family and friends outside that circle to everybody else in the world to get some traction under our belt and get into, the family office world and the institutional world. But again, it goes back to what you said about taking time. But, we're going to talk a lot about that, a lot about systems and techniques this year at the summit. I'm looking at the summit this year, Isaac, being for anybody who wants to get in the multifamily business, thinks real estate's going to be a great opportunity, or you're already been in single family and you're trying to switch over into multifamily because of the economies of scale, it's going to be great for that. Or if you're somebody who's already done a ton of deals, come and get a shot in the butt and a little bit of education, because I always say that we always could get educated.
No question about it. And I took a quick glance at the list of people that you mentioned were going to be there. And one thing that I will say is that it's a list of truth tellers. It's a list of people who will honestly assess where things are in the market and tell you the truth about the way this business works, because it is a business, and it is something that it's just not a panacea for quick wealth at all. And the more that you think it is that, the worse you're going to do, or the more you're going to lose your friends and family's money. So I think, Mike, you've done a great job of compiling honest, truth teller, successful. They know what they're doing. But if you want to come and get an authentic look at this business, this is a great thing to come to.
Yeah. And, that list of people is a great segue. I mean, Neil Baugh is back this year, and we all know he's a data scientist, right? He does all this research. He tells a very truthful story. Got Veena Jetty, who has $1 billion under $1 billion in assets under management, as our keynote. Matt Faircloth, who's in that camp as well.
Yep.
And then, Forrest Corral, who he and his partners with Praxis Capital have done over 100,000 units in the last 10 years. So, this isn't going to be just somebody teaching you how to do it. You're going to get some real life experience by being there.
I completely agree.
Yeah. And, already some of those speakers have even said, hey, I can't wait to just hang out and listen, So that's people looking for that education.
Yeah. But I think people like that, they learn constantly, and it's just goodness. The more that you learn, the less you realize and that just becomes truer and truer and truer. The longer I live is how little I know about given topics. I would argue even multifamily. I don't view myself as a multifamily expert by a long shot. Have a lot of experiences, but just sitting there and sitting at the feet of people and humbly trying to take it in is about the only thing I can do these days, because this is a humbling business.
Yeah, 100%. Well, listen, thanks for being here. Appreciate you.
Appreciate you, my friend. Thanks for having me.
One quick question. What are you reading these days?
I just finished a novel. Reading novels is by far my favorite. I get a lot more out of them than I do reading any business books. I just finished A Gentleman in Moscow, and it is a gorgeous little gift to the world. I would recommend it to absolutely anyone. It's a beautiful, unbelievably creative, well-written book. And then I read the Bible every day. So between that and all the financial publications and everything that I'm reading, I get a lot. To be honest, I'm in a period of my life, Mike, where I don't really listen to podcasts anymore. I read less than I used to. I'm more interested in engaging individually one-on-one with people and learning from individuals and experiences than I am taking in content or anything at the moment. That's just a personal thing. I just kind of got burned out by it. So I listen to a lot of music these days and read novels and do stuff like that.
That's cool. Should be able to raise some capital in Palm Springs, though.
There's nobody here, Mike.
Is it deserted?
I have to go ask my wife for some money. Oh, it's completely deserted. We're the only people here. Yeah. If I see somebody, I'll be like waving at them, there's nobody here.
That's funny because it's so hot. Yeah.
It's so hot.
But it's dry heat.
It's freaking hot. It is. Yes, it is, I guess, dry. It's just like being a turkey roasting in the oven for Thanksgiving.
Yeah. All right. Well, listen, hey, thanks for being here. I appreciate you. Have a great weekend. And any final thoughts you'd leave a multifamily investor with today?
Don't think about it as a financial business. Think about it as an operator's business. And you need to be thinking about, does this deal work without leverage? And then how much risk am I adding into this process with leverage? And how much margin of safety do I have in this deal? And stop thinking about the fees. If you're doing a deal and any part of your motivation is the fees that you're collecting from your investors, you should not be doing deals. Right. And so if you can be honest with yourself and say, is this any part of my motivation? Get out of the business, or stop and wait until you've matured to the point where you can actually do it for the value you're adding, not for the fees you're getting.
Yeah, it's always about the other person. Make sure that I mean, I have two big missions in this business. One is to provide safe and secure housing for my tenants. And the second is to provide above average returns for my investors.
Solid. It's so boring, Mike. It's so true.
Yeah, 100%. Well, thanks for being here. And everybody, thank you for listening in this morning. I appreciate you. I'm glad that you were here. If I can answer any questions or Isaac can answer any questions, don't hesitate to reach out to either one of us. Enjoy your weekend.